As the stock market continues to shock almost all of us due to the recent rallies and the violent swings over the past 12 months or so, income investors like myself are always on the edge of our seats looking for that next all-star income ETF that offers consistent income, capital appreciation, and on top of that limits downside risk. And while income-focused investors have been piling into the JPIE ETF over the last few years, making it one of the largest ETFs now in its class, in this video we are going to explore another high-quality ETF offered by JP Morgan, known as the JP Morgan Income ETF, ticker symbol JPIE. And we're going to see why so many investors who own shares of the popular JEPI ETF are now piling into this newer income-oriented ETF, known as JPIE. Now we're going to go over all this and more in this video. Right after you please drop a like on it and subscribe for more content like this in the future. So heading over to the JP Morgan website, let's read about JPIE and see what it has to offer. So JP Morgan says that JPIE is designed to deliver income with a secondary objective of capital appreciation by investing across debt markets. Now, this ETF invests opportunistically in a wide variety of debt securities that have a high potential to produce attractive risk-adjusted income and have low correlations to each other. It also utilizes a flexible approach, allowing allocation shifts based on changing market conditions, and lastly, seeks to deliver an attractive dividend every month. Now, I think it's important to define exactly what a debt security is because the JPIE ETF does have a lot of them in the holdings. So a debt security is a debt instrument that can be bought or sold between two parties and has basic terms defined, such as the notional amount, the amount borrowed, the interest rate, and the maturity and renewal date. Now, some examples of debt securities include things like government bonds, corporate bonds, CDs or certificate of deposits, municipal bonds, or preferred stock. Now, debt securities can also come in the form of collateralized securities such as debt obligations or CDOs. Now, some more important facts about the JP Morgan JPIE ETF. The expense ratio on the ETF is only 0.41%, which isn't all that bad considering the way this fund works. The assets under management for JPIE is $527.91 million, which is an actual pretty decent size considering this ETF's inception date was in October of 2021, so it has not been around all that long yet. Now, the fund type for this ETF is taxable bond. So it is very important to note that this type of investment is going to be much different than that of something like JEPI or JEPQ, which brings us into the next important portion of this ETF, the holdings breakdown. Now, because this ETF does invest in things like debt securities, bonds, the holding breakdowns is going to be much different than what a lot of us dividend investors are used to seeing. The breakdown is as follows: securitized 64.25%, corporate 31.86%, and government 2.21%, cash equivalent 1.75%, and other and derivatives a tiny portion. Now, the top holdings are things like the Government National Mortgage Association at 6.5%, Government National Mortgage Associations at 6%, things like the Federal National Mortgage Association at 4.5%, 6%, 5.5%, 5%, and a BPCE SA at 5.975%. Now, another thing that's important to note about this fund is the fact that there's a ton of holdings. As of July 4th, 2023, there's around 1,313 different holdings as far as long positions in this portfolio and 4 different holdings as far as short positions. Another important thing to understand about this portfolio is the quality of different bonds that this ETF has in the portfolio. So obviously AAA is the top quality as far as a bond, and something like CCC and lower is going to be less high quality. But as you can see, this ETF has a majority of all the holdings, being the AAA category at 31.7%, AA being at 3.3%, A at 6.7%, BBB at 15.2%, BB at 26.5%, B at 9.4%, CCC and lower at just 1% and not rated at 6.1%. Now, the important thing to understand about this is the fact that the lower quality, the lower grade you go down as far as bonds, most likely a lot of terms, the higher yield, the bigger return you're going to get. Because when there's more risk, you're going to be able to get more reward in most cases. Next, looking at JEPI's dividend payouts over the past few years. So the JEPI has a 30-day SEC yield of around 6.4%, and while this yield is obviously a lot lower than that of JEPI's, 6.4% is by no means a low yield. 6.4%, especially if it's stable, is actually very attractive for most income-oriented investors. And to look at this ETF's payouts in more detail, back in November of 2021, this ETF paid around 13 cents as far as a dividend goes. The next month after that, 18 cents, 13 cents, 11 cents, 14 cents, 14, 2014. And then since then, since around June of 2022, this ETF has been paying a pretty consistent 19 to 20 cent dividend per month every single month, more or less, since the past year or so now. So even though the JP Morgan Income ETF, known as JEPI, does have a lot of positive things to offer, there are still some obvious risks that we have to go over just to be fair and to look at this ETF from all sides. So one of the risks, obviously, is the fact that the JPIE ETF holds around 20% more or less of non-investment grade junk bonds. So if the up and coming recession that a lot of investors think is right around the corner is a little bit worse than a mild recession, if you will, junk bonds do have a higher default risk, and the risk obviously goes up in the case of a severe recession, of course. But as we talked about earlier, the fund does have a large amount of the overall holdings within the portfolio at AAA quality bonds, which should be just fine in almost any economic circumstance. So in conclusion, what do I think about the JPIE ETF, and is it going to have a place in my personal portfolio? Now, for me personally, being more of a income focused ETF and stock investor that's looking to conserve the majority of my capital, have it grow consistently, but pay me along the way, the JPIE ETF does definitely have a spot in my portfolio. And I think a portfolio made up of things like JEPI and JPIE, as well as other income ETFs, are definitely worth looking into for the investors out there that are focused on long-term income generation. But I want to hear what you guys think down below about the new JPIE ETF, and if the ETF does have a place in your specific portfolio in the future. If you enjoyed this video, make sure to please drop a like in the video and subscribe for more content like this in the future. Thanks as always for stopping by, and I'll see you in the next one.